What's up guys, welcome to another video. In this video we're going to be walking you through how to identify the areas that bank orders are most likely to lie in, where we are most likely to see an aggressive reaction from price. So let's head down to the charts and we'll walk you through exactly how we do this. What's going on guys, welcome down to the chart section. Now in this chart section we are going to talk to you about exactly what we just stated in the intro, and that is where to find bank orders and where bank orders are most likely to sit. Now if you do this consistently and you use essentially what we're going to show you here, you are going to see price react at these points more often than not. So how are we going to do this? The main thing that we're going to be looking for, guys, is the principle and the understanding of the manipulation of any given market. Now, what we are always looking for is a point in price where we are sweeping previous liquidity lows, and then we are running back and sweeping an other high, for example, in this case, high or low, and we're sweeping it out, giving us a clear sweep of liquidity on one side and then sweep of liquidity on another side, telling us that this low area has had an injection of liquidity which is manipulating the direction of the market. Okay, so what we are going to do once we have located this area is we are going to look for the high of this area. Okay, we're going to look for the same thing to happen. Run the highs and then run and break down a low. Again, that tells us the same thing, that we have an area of manipulated price. When we've done this, if the direction of the movement is up, we are going to simply follow back and find where the momentum becomes bullish, where the fair value gaps are, where the unmitigated order blocks are, and we are going to look for price to tap back into this area, as this is the most likely area where the unfulfilled orders are. So let's go down to a real chart now and I'll show you exactly what I mean. So guys, we are down here on GU. Now this trade that we're about to walk you through and the overall area we're about to walk you through, we actually showed you guys completely free and live in one of our live streams that we host here on YouTube. We also have a video walking you through this overall setup itself, but in this scenario we are simply following the rules of the principle of how we are going to locate this. Okay, so we're looking for our 2 points of manipulation within the market, creating a full range that has been manipulated on both ends, telling you there is orders within this range that are causing this manipulation to take place. So we're simply going to find where we were running bearish structures, which for example is here. You can clearly see that the lows within here that took out the highs have been broken, and we are creating new higher lows and moving lower until this point where we come above this high here and this high here, telling us that this is the lowest point where the manipulation is occurring, and that we are sweeping liquidity from here, breaking structure here, and that this area itself is the most likely area to hold unfulfilled bank orders. Again, we can find this area, but if structure is created higher and we push above another manipulated point, then overall what we're going to be seeing is the whole range and the whole setup shift. But in this case, you can see that we went bullish, we follow price action bullish, and we break down at this point right here after creating this 5-minute range. And then we follow price back to find exactly where these orders have come from. Now you can see there's a few different areas across this move where orders have come from. One being here. You can see the imbalance. You can see the order blocks are mitigated. There's also an area here. You can see again. There's clear imbalance. It's unmitigated. Orders are clearly coming into the market in this area. But we're looking for the deepest and closest POI to the actual manipulation itself, i.e. the low or high of the range, aka the point where the order flow is being manipulated and shifted, also known as swing points. But of course, what we are referring to here in this session is the exact area that we expect price to come to. Now, the reason we are looking for this area, for example, is because we can see that there is clear imbalance between the low of this candle right here and then the high of this candle. You can see there's an imbalance here, there's an imbalance here, and collectively there is imbalance between these points in price wherever unfulfilled orders lie. Okay? Which means a lot of the time they're going to originate back to an order block of some kind, whether it is a collective S&D zone. So, for example, the last down move before the upshift. So here, and you can see that's been tapped in already. Or in this case, we are looking for the singular candle that is providing these orders. Now, when we find this candle, because we can clearly see that there is no unmitigated order blocks lower, we have a low which is formed directly above it, which is going to act as liquidity for this area, meaning that the banks have built up liquidity in this area. So when they do, or if they do come down and fulfill these orders, they have this liquidity to take as well. Now, what we would expect for this is for most of these ranges to tap into the low area, for example, so the order block that we have located, regardless of how large your range is, and we'd look for it to tap to the high. So the setup itself would look a little something like this: stop loss below your low of the range, and then having the high up here, okay? And then from this point, all we would do is allow price to run, because while we play between this point and this point, we are staying within the manipulations that have been caused by the investment that lies at this low, okay? And then the investment or profit taking area that has been created at the high. Without breaching this high or breaching this low, we are going to stay within this range. If you want to learn more about ranges, head over to the YouTube channel and find the liquidity ranges video, and that will give you a much more simplified breakdown and help you learn about liquidity ranges and how they play out inside of the market. So what we're going to do here, guys, is we're going to hit you with a fast forwards, and we're going to let you just see exactly what this does and if this plays out. Now, like I say, this was given out completely free on our YouTube live stream, so you can go through and check that out if you want to. If not, you'll see the result of what happens exactly right here anyway. We need to extend this. And there we have our tap, and you can see from the tap how aggressively price takes off. Now, why does it take off so aggressively? Because this is the area that bank orders are sitting unfulfilled. So when price returns to this area, those orders are being filled instantaneously, causing this huge eruption in price. The orders sitting here are pushing price higher. Where are they pushing them? Up to the other area they took partials from, or they took profits from, therefore causing this pullback. And they are now doing the same thing. But as always, we would expect this to run to the high to create a new manipulation range, a new swing structure, and we can look for price to run higher again out of that. But until we hit that TP or the stop loss, we would expect price to go higher. Again, you can use this system for a simple directional bias. It's completely up to you how you apply it. Again, running down towards the entry level here. No taps back in, so break even would be safe. And you'll see that we eventually get to TP. Eventually, after a little while here. So, I hope that this reasonably short video has helped you understand the principles behind where bank orders are most likely to lie. I really do encourage you to go and test this out, because even if the market does not go bullish from a bullish range, for example, most of the time, I would say 80% of the time, you will see a reaction from these areas, okay? Back test this, and if you're not already, link down below for the Discord, and you can show us the the testing that you've done on it, etc. Apply this and add it into a system that you already use, or use it as its own system, whatever you want to do. But that pretty much is the basics of it. So the rule set that we are going to be following is we have to have a manipulated high of a range. For example, bullish movement into a bearish movement. We have to have the same on the low, bearish movement into a bullish movement. We then want to locate, depending on the direction of the range. So for example, here we are clearly bullish. We want to locate, if we are in a bullish range, the lowest untapped order block or fair value gap that has shown momentum. We can clearly see the momentum with the size of the candles and the way that the structures have shifted massively. And we will look for that to be tapped in for the unfulfilled orders to be fulfilled. Now, of course, there are going to be scenarios where this is not going to apply, but generally, regardless of time frame, whether you're using the hourly, whether you're using the 1 minute, whatever it may be, you will see if you apply these rules, manipulated high, manipulated low, swing range, unmitigated highest or lowest point, unfulfilled orders will be sitting there. So guys, give this a practice. Really do test it out. I hope this helps you out, guys, and I'll catch you in the next one. As you can see, guys, this video has shown you how easy it is to locate the areas that bank orders are most likely to lie. If this video has helped you in any way, then make sure you hit that thumbs up button, hit that notification bell, and drop us a comment down below, and we'll catch you all in the next one. Peace out.